Good afternoon, welcome to GrainTV. My name's Cody Bills, this is Logan Burgess. Today is July 15th, a Tuesday. We had the market here very mixed, both between commodities and between delivery periods. Look at corn for September, trading down 7.5 cents. New crop corn down 6.5 cents. Soybeans for old crop down 16.5 with new crop unchanged. Wheat in Chicago trading unchanged, and December delivery up only a half penny here. Now, Logan, we did have NOPA crush numbers. It is interesting when you look at old crop stocks here, which is what this would affect. Really we had a very sharp sell-off. Is that because of these numbers?
I don't think it was, Cody. We saw the market really trading quite a bit lower coming into the report. After the numbers were released, we actually saw this market retrace a little bit of the losses that we saw coming out of the overnight session. Could have been a lot of bull spread unwinding in today's trade, but let's take a look here at the NOPA crush numbers that were reported. In terms of the June crush, we saw 118.7 million bushels reported crush. That was about 800,000 bushels on the light side, so a little bit of a negative factor there. Really, the only positive number that we saw at today's report was the stocks figure, 1.847 million pounds reported there for June oil stocks. And that was a little bit lighter than what traders were expecting. So it seems like there still is good demand for soy oil in the U.S., but maybe crushers don't have quite the same incentive that they did a couple months ago, really largely due to the price action that we saw there May coming into June.
Absolutely. And just to give you some context here, the May crush numbers, when we were looking at those, we were coming down from 128 million bushels crushed in May. That was, and we were expecting, and most analysts were expecting that we see the number of bushels here retreat this month simply due to the fact that soy meal, the prices were higher. We expected a little bit of demand destruction as a result of that, and we ended up coming out a little shy of analyst expectations.
Now, Cody, for producers right now, though, really the big story is this November contract. We're getting a lot of calls in the office for people that may be more undersold than what they like to be at this point in the marketing year, especially considering the price action that we've seen since the June 30th acreage report. Right now, we're looking at a daily chart of that November contract, and in the last 2 days trade action, we did have some indications that we could be seeing a little bit of a bottom here. Can you kind of walk through kind of the discussion you and I had before the show today? What are some things to keep an eye on, and what might we see here out of this bean market moving forward?
Sure. Well, first of all, technically, when you look at this, it is a little bit oversold. You look at the RSI on the bottom, we are in an oversold state. The other thing that was interesting is really on the WASDE report when it was released, I didn't see anything very, very negative for new crop. No new news, especially after that WASDE report. They didn't adjust any sort of acreage, they didn't adjust any sort of yield there, and as a result of that, we came in right about on par with analyst expectations, yet we sold off very sharply. We finally found a little bit of a bottom, retraced. Yesterday was a very muted trade, nothing significant, but today we traded down, kind of retested those bottoms, and the trade action going into the close I thought was very positive. Last 3 hours, we really kind of rallied back and erased any of the losses that we had earlier on in the day. So I look at this and I say, this is very positive here. I'm not necessarily saying that I'm bullish, that I'd want to go long, but most producers out there are long right now, are long at some capacity. And I would be looking at this and saying, all right, so what are my price targets if we do get a bounce? And this is what I used. I used the Fibonacci retracement going from the highs right before we broke to the lows that we saw here on Friday. And what you'll see is that back on June 3rd, we did have a little bit of a gap. It also happens to line up with that 38% retracement. So if we get up right around that 1133, 1132 price area, I think that that's an area that you'd want to be looking to make some sales if we get a bounce up into that spot.
Absolutely. If you have any questions about that, feel free to call the office here at 877-472-4607. Additionally, if you want to take a look at the trading platform that we're using here on GrainTV, you can call our office or visit us online at grainhedge.com. We have a bunch of great trading platforms available here that are great for the desktop computer and on mobile devices. If you're not quite content with your current brokerage relationship and want to see if you can lower the cost of placing trades right now on futures and options, feel free to call our office. Number is 877-472-4607, as I said. Coming down the pipe here for the grain market, tomorrow we're going to be getting the EIA ethanol numbers out. Thursday's export sales day, and we'll be here back on GrainTV reporting on both of those. Thanks for joining us on a Tuesday. We'll see you tomorrow.